everyone. Thank you for tuning in to the COVID interviews. My name is Nicole, and together with my schoolmate, Serene, we'll be discussing the impacts of the COVID-19 pandemic on the banking and finance sector in Singapore. We are grateful to have with us today Ms. Au Kim Kit, who is a partner in Bird & Bird's Banking and Finance Group. Her practice involves advising clients on issues in financial regulation, corporate and investment banking transactions, wealth management, private banking, payment services, and financial technology. Ms. Au was previously appointed as Senior Legal Counsel at the Monetary Authority of Singapore and Asian Regional Director for the International Chamber of Commerce, International Court of Arbitration, and the ICC Dispute Resolution Service. With years of practice under her belt, we are sure that Ms. Au's perspectives on how COVID has affected her industry will be invaluable. Thank you, Ms. Au, for joining us today.
My pleasure. Thank you so much for inviting me. And I really hope that, we'll be able to use this as a platform, to just share my experience and also what's currently happening in the world, which is very surreal.
Thanks, Ms. Au. So first, we'll be discussing 4 issues. The first being the impact of COVID on traditional banking and the rise and anchoring of digital banking. Secondly, we'll explore the relationship between COVID and cryptocurrency. Thirdly, COVID's impact on transaction flow. And lastly, on whether COVID has forced banks to rethink the importance of technology, as well as the pandemic's impact on jobs in the banking and finance sector.
Thank you, Nicole. With these 4 issues in mind, perhaps we can start with an issue that most can relate to, which would be how COVID has impacted traditional banking and how digital banking will develop in the near future. So, Ms. Au, to start off, perhaps you could establish whether digital banking was already a common practice before COVID hit?
So, in relation to digital banking, I think we need to be clear, firstly, what are we defining as digital banking? I know that, it's quite a sort of sexy term in recent times because, we read about, how many industry players, are trying to apply for the new license that the MAS, basically the Monetary Authority of Singapore, is going to give out. But I think that banking itself from a digital space, if you consider it from before, internet banking is certainly a form of digital banking. And then, more recently, we have your Pay Now, Pay La, Pay whatever, right? So those are also, to me, digital platforms that enable digital banking. And obviously, the traditional banks, so to speak, in Singapore, the established players, the 3 big banks, they already have these platforms that have been in place for some years now. And to me, it was a response from the traditional banks into the forefront of technology. So if you ask me whether digital banking is so new or so unique, I don't take that position. I just think that now the evolution is into more of like an established player collaborating with a startup or a technology player to go into that space. And it could be for various reasons. It could be for innovation, it could be for convenience, or it could just be for, as I said before, the sexy flavor of the month, so to speak. Yeah. So I think that's my take on digital banking. If you ask me whether or not we will survive without the new sort of innovation, I think we still can survive because the traditional bankers are already very much in the game, so to speak.
Okay, so if you say that digital banking is actually already kind of commonplace right now, do you think that as it continues developing, traditional banking itself might become obsolete or perhaps not as relevant?
Do you have a time frame for that question?
Right now we're only a few months into the COVID situation, but perhaps in the next year or 2 years.
Oh, there's no way that traditional banking will become obsolete in the next couple of years. No way. So the reason why I asked you whether you have a time frame in mind is because even people like myself, we are considered middle-aged. But I can tell you that I will bet my last dollar that even until, well, as long as people like myself are alive, I think traditional banking will still be be there. So I think some of the recent developments would be, for example, technology is so advanced now, we hardly cut a check, for example, right? But people like me will know how to write a check, how to write it so accurately, and that, there are some of my friends who said, oh my gosh, are they going to really get rid of checks? Because if they get rid of my checkbook, I will foam in the mouth, right? In that sense. So there are people like us so as long as people like us are still around, I think the concept of traditional banking will still be relevant. But as I said, traditional banking is also evolving with the times. So to the extent that they are using digital platforms to support traditional banking, I'm not so sure traditional banks, so to speak, will ever become obsolete. Yeah.
Oh, so you do acknowledge that like physical branches for these banks will remain important for perhaps the middle-aged and older age groups to continue accessing banking.
Yes. So people like my mother, they still go to the ATM. Okay, so to them it's an upgrade, because to go to an ATM itself to them is already an upgrade. They take the passbook and update themselves, their own passbook themselves in the ATM. To them, that is digital banking. Okay. But to me, it's like, who on earth has passbooks anymore? Right? In that sense. So what you are saying is that in maybe 10 years' time or 15 years' time, who on earth will even have to go to a physical bank for any services whatsoever, right? So if you are equating physical presence with traditional banking, I think maybe that's not being very fair to traditional banking, because I think we already are considering not having to go to a bank in itself as very commonplace, right? But yet we bank with the traditional banks, but we don't even need to go to a physical bank branch to carry out all our banking activities.
All right, thank you. Next, we can move on to the topic of fintech. So banks
Sure.
these days are tapping into fintech to preserve their relevance and enhance their service standards for customers. However, fintech can in fact present certain legal issues, including but not limited to breaches of data protection and cybersecurity, given that large amounts of data are collected by fintech companies. Banks have also begun using robo-advisors to provide advice on investments. So do you have any experiences you could share on the topic of fintech and the usage of robo-advisors?
It's funny you mentioned this, because I have in a few years ago, I have actually advised a robo-advisor. And at that point in time, robo-advisors were extremely rare. And if you ask me now whether robo-advisors are so advanced, not really. So in that particular instance, it was just basically having like you interface Skype or equivalent of video conferencing activities with a client, or you have an automated algorithm to calculate the risk appetite of a client based on historical patterns of investment. So that to me was, wow, at that point in time, wow, it's like so out of this world, right? Who would have thought of it? But fast forward 5-6 years later, I'm like, huh? You mean you don't have this? So I think even within the fintech space, and when we talk about fintech, we can talk a bit about the definition later. But when you talk about robo-advisors on its own, really I don't see that as being like a quantum leap. I really hate that phrase. In the sense. So I've always said that the next big thing has to be like teleportation. Otherwise, everything to me is like not the most impactful. But yes, fintech is here to stay. Fintech to me started off because of the fact that the advent of technology has to somehow marry itself with the financial world. And we have only seen positive examples of how this has become so relevant and significant. Robo-advisory is one particular example. Other examples to me, and I'm sure you'll come to it later, I mean, the concept of digital tokens, for example, cryptocurrency, the idea of using a physical, I beg your pardon, an an electronic platform to carry out investments. So basically now we can use a phone and we can, basically trade. We can even do, KYC or customer due diligence just by having Skype, just to match your ID card with your photo, your face. You can actually achieve all that. And all those things have been agreed to and approved by regulators. So for me, fintech is the prime example of keeping up with the times. And to be very honest, 10 years ago, you would never have heard of anything even vaguely, similar. But within the last 2 years, I've seen that really become, it's moved so fast, and I think it's a very good sign.
All right, thank you for sharing.
Apologies, I was muted. All right, we'll now be moving on to our second area of discussion, which involves cryptocurrency and the relationship between COVID-19 and the rise of cryptocurrency.
Yeah.
So before jumping into this issue, Ms. Au, maybe you can share with viewers who are not very familiar with the banking and finance sector what exactly cryptocurrency is and how it differs from regular currencies.
Okay. Now that in many ways can still remain a very controversial topic. But to me, cryptocurrency is really like a form of digital tokenization of value, right? In that sense. If you think of cryptocurrency as interchangeable with, for example, cash, then you are on the right track. So we have seen in recent times where people can use Bitcoin or Ethereum to purchase coffee from a cafe, that only accepts cryptocurrency. Then you can see that as being an alternative to what I call traditional tokens of value, for example, cash. But the only difference with regards to cryptocurrency is that it actually still hovers or gets recorded on a digital ledger, so to speak, in the sense that there is an electronic network that allows cryptocurrency to be registered, in terms of its issuance, in terms of its transactions. And for me, and this is really just my personal opinion, I feel that cash is not so bad. I still think cash is not so bad, but I like the concepts of the technology that's linked to cryptocurrency. For that matter, I would bring bring you back to what some people have often accused cryptocurrency of, right? Which is its nefarious nature, very clandestine, and you almost always can never know who was the last person who used it or whatnot. I feel that if it's used in a positive way and it has got its value, because the fact that you can trace still on its digital ledger would actually be very advantageous rather than not. But the thing for me is that how will cryptocurrency feature in our economy? I think it's still going to take, okay, again, this is my own personal view, it will still take several decades. And the only people at the moment who will find cryptocurrency very attractive would be people who may have national currencies that are very weak or very volatile, or people who really just want to do bad things. in that sense, if you know what I mean, right? Very clandestine and maybe a little bit dark. But let's go back to the example of cash as I try to interrelate that with cryptocurrency. It wasn't until the 70s or mid 70s, you guys were clearly not born then, but I was. So it really took cash a long time before it became a stable sort of international mode of exchange. And I think if cryptocurrency wants to become the alternative of cash, it's going to take time. you and I know that the fluctuations of internationally recognized cryptocurrency such as Bitcoin, I will give you an example of what I mean by it's still not stable. And for them to achieve that stability like cash, it's going to take a long time. And then, much less for cryptocurrency to be a peg of sorts, right? So typically now, there are lots of currencies around the world that peg themselves to, say, the greenback, which is the American dollar, and all that. So for cryptocurrency to first become internationally recognized is going to be the first hurdle. Now, the second hurdle is, will it even become an international peg of sorts? That is just, I don't think I'll see that in my lifetime. Well, but I could live a long life, so you never know.
I see. Thanks, Ms. Au, for explaining about cryptocurrency. I noted that you described cryptocurrency as clandestine and even nefarious. So, what are some problems that you foresee in the regulation of cryptocurrency if it were to become more commonplace?
So I think this is something that many regulators around the world, including MAS, has already addressed. So basically, when you deal with cryptocurrency, and because of the nature of it being, as I mentioned, rightly or wrongly, clandestine, nefarious, is obviously because of the fact that it can be used for, illegal purposes, such as money laundering, for assisting terrorism financing, and that is something that our government has addressed through more recently the Payment Services Act, whereby cryptocurrency or digital payment token intermediaries will have to be regulated, especially in the area of money laundering and terrorism financing. And just maybe a month or a couple of months ago, we also are introducing this new regulation called the Omnibus Act, whereby again, cryptocurrency is going to be featured quite prominently for the purposes of it being regulated for AML and CFT purposes. So I think that the regulators have kept abreast of such evolution and development. And I think that those people who are intending to use digital payment tokens for the bad reasons should have a rethink, because obviously this is going to be more commonplace. And I used to think that it's a bad idea for it being commonplace, but now that obviously I'm okay, fine, I'm resigned to the fact that it's going to be around for a while, then I think that we really need to regulate the same way as we regulate, like financial instruments of other sorts as well. So the minute you are not a regulated, the minute you are not in the regulated space, then you attract a lot of wrong attention. So I think that it is a very good and positive and progressive step forward for this space to be regulated.
Thanks, Ms. Au. On to you, Corinne.
Okay, so aside from how COVID has affected the way we approach banking and transactions, it has also severely affected businesses and their operations. So with that, we'll move on to how COVID has affected transaction flows and what that means for the banking and finance industry. So given that many businesses have suffered a loss of revenue from reduced operations during this period, how do you think banks can withstand the effect of non-performing loans or deferred and delayed loan payments from businesses in this case?
Yeah, so we have recently read in the papers of many of these companies, going belly up, or having problems, whether they are listed companies or non-listed companies, and then you realize that they also have a lot of bad debt in that sense. So the loans are defaulting or have already defaulted, and the banks are obviously going to make a claim on them. Letters of demand flying in and out. How a bank protects itself is, traditionally is always in a sense that they have security over assets. So that is the most traditional way of securing their exposure. But if you are asking me if it's a physical asset, then obviously it's easier, because then they can sell like machinery or property, and then they can actually then get the money back, right? It's the same concept as a mortgage, for example. You take a loan from a bank, against the security would be like the home that getting the loan for. In the event of a default, then the bank will seize that asset and sell your home, and to protect themselves. How would banks safeguard themselves against companies? I think in every business, including the banking business, you have to take some risk. So typically the banks will look at the credit risk of the company, or whether or not this company is obviously has never done anything wrong, is always above board. So I think that the bank will still have to take some risk. But in terms of the actual exposure that they try to ensure that they are not exposed, I still think that physical assets would have to be what banks should be looking at getting. So that's my personal view about this.
All right, sure. So we'll now move on to how businesses are dealing with COVID. So do you think that the Monetary Authority of Singapore's steps of allowing deferred payments for secured term loans and providing lower interest for SME loans have been sufficient for businesses to tide through COVID's impacts? Or what other schemes do you think could be extended to these businesses?
I think that any extension of efforts to help the SMEs and businesses tide through this period has already been something that the MAS has done. The issue now is whether or not, and I think recently we also read about the fact how MAS is working with the financial institutions to sort of give this a reboot, so that this deferment can cease and the repayment can slowly come back in a cushioned way or whatever. Because at the end of the day, the bank is also a business, and you cannot expect that the regulators to keep telling the banks, oh, I'm sorry, you have to take this, you have to cushion the fall for all these people. So I think it has to be a balance, because ultimately, if you don't allow, if the initiatives do not allow a cushioned approach, then the SMEs will not be able to pay up, and then they go belly up, and then the banks will suffer anyway, right? But on the other hand, if you keep allowing these SMEs to defer payment and everything, then what's going to happen to the banks, right? So you say, okay, don't worry, just pay interest, don't have to pay principal. But there has to be a balance. So I think ultimately it will come to a point in time where there has to be a stop. But I'm hoping that between now and that point, there will be a gradual cushioned approach, rather than saying, okay, by this date, that's it, it's back to normal. Because I don't know whether most businesses can go back to the normal as what we used to know was the normal. Yeah.
Thank you. And lastly, do you foresee the banking and finance industry as a whole seeing a contraction in dealings as businesses find themselves more cash strapped in this period?
The banking and finance sector is very big. So if you are looking at sort of the lending space, the credit and security space, obviously with less acquisitions, less takeovers or such kind of transactions, then there will be correspondingly a less demand for financing. So in that space, I do see a drop in transactions. And even if there are transactions, there could be more in relation to refinancing of existing loans rather than sort of new transactions in relation to sort of fresh acquisitions. There are other parts of the banking and finance sector that I particularly see a lot of potential. For example, in the private banking space, whereby there are ultra high net worths or their ultra high net worth families intending to sort of anchor their assets in a place like Singapore, for example. And obviously our value proposition is astounding compared to our neighbors or any other place in the world. Well, I mean, it's true in the sense that we have probably a little bit more stability, and our infrastructure is also, I feel, comparable to the likes of London, Hong Kong, Tokyo, and New York, in the sense of us being an international financial hub. So we still have that potential in the private banking space, and also in maybe a lesser way, the fund management space remains quite active, in the sense that people always have to park their money somewhere, right? And if they're not buying something, if they're not buying shares in a company or whatever, they have to invest in something. So maybe they will invest in funds which are calibrated in such a way that can withstand the pandemic, or at least can somehow protect the investments in a way. And I'm very wary about using the term in protect, because nobody will want to say that your investments are protected. So maybe in a safeguarding sort of way, you make investors want to be able to part with their money to invest in something like this. So I think in those two spaces, the private wealth space and also the funds space, I think there is still quite a bit of potential. Yeah.
All right, thank you. We will now move on to Nicole.
Yeah, thanks, Ms. Al. So we have come to our last issue, which is how the pandemic has influenced businesses to rethink their usage of technology, and also its impact on jobs in the banking and finance sector. So we noticed that the banking and finance sector has not been as hard hit as other sectors in terms of suffering job losses. So we're just wondering, how is it that these sectors, the banking and finance sectors, have managed to stay afloat during this crisis?
I'm not sure that's entirely right, because we have also read of bankers losing their jobs and all that as well. But you are probably correct in the sense that comparatively to other industries, such as, for example, the tourism industry, the aviation industry, the F&B industry, the banking sector is probably a little bit less impacted or affected. But that's also because, in a way, banking and finance continues to, it's like on a good day or a bad day, pandemic or non-pandemic, you still need a bank, right? The same way as we like to think that you need a lawyer or a doctor. But I wouldn't go so far as to say that the banking space is weatherproof or pandemic proof, because ultimately there will be job losses, and specifically in the so-called higher management, somehow they get rationalized in that sense. But whether or not technology is the cause of it, or whether pandemic is the cause of it, I think that is the question we need to answer. Technology has always been known to replace physical jobs, whether in the banking industry or otherwise. So I think in that sense, we continue to see a sort of a natural rationalization, if you like to call it that way. So technology will often replace like some back office roles or even middle office roles. But the front office roles, I think, would still be quite relevant, because, like, for example, if you need to be client facing, you will still need that sort of face time, and there are certain sort of banking clients that will not want to talk to a robot or a hologram. So then, you still have that as being quite relevant. Now, whether the pandemic has caused any sort of negative impact on this, I think, needless to say, more or less it has. And how and why, to be very honest, for the banking industry, I still cannot fathom how a pandemic actually, unless it's because it's a knock-on effect from the lack of acquisition, therefore lack of banking transactions, then okay, maybe some roles will become not so relevant or not so crucial during this period of time. But by and large, traditional banking methods, or in the growth of the digital banking space, I still think that there's quite a lot of potential that these institutions, the financial institutions, will require to hire staff, and all that. I think recently we have read of one of the local banks that have in fact hired like something up to 3,000 jobs or something. So I think that is a positive sign. Now, whether they are the kind of roles that pays you a 5-figure salary a month, or is it the kind of roles that is equivalent to a lesser sort of job scope, I don't know. But if you are expecting a couple of thousand jobs to be all in the higher range, I think that is not practical. It's not going to happen.
Thank you, Sam. Right, so just now you mentioned a bit on how jobs in the banking and finance sector may be replaced by technology. And indeed, we see that COVID has impressed upon these sectors the importance of possessing capabilities in digital functionalities. So will this effect a change in job requirements in the banking and finance sector?
You're saying whether technology will impact the traditional jobs in the banking and finance sector? For sure. I mean, for sure, because ultimately, technology can replace all of us, lawyers as well, in that sense. But as I said, the typical kind of roles that are client facing, or if a physical presence has a certain kind of a value add or a value proposition, then I think those would be lesser susceptible to be replaced by technology, as opposed to just pure numbers crunching or gathering of data and all that. In fact, I think in those roles, technology would be more reliable than to have to deal with human error sometimes, right? Yeah.
Clarice?
All right, so we've actually come to the end of this segment. So,
okay, I'm relatively unscathed, I hope.
So thank you, Ms. Au, for taking the time to share on how COVID-19 has impacted the banking and finance sector. While it may pose as a challenge in the short term, your insights have provided a glimpse into how the industry can actually leverage on this situation to further develop and strengthen itself. So with that, we conclude this installment in COVAID's Conversations with Lawyers series. Thank you, Ms. Au.
Thank you, Clarine, and thank you, Nicole. This has been a pleasure and an absolute thrill to be able to provide you with some insights. I can see that my dogs are giving me some attention now, so I guess this is a good time for me to sign off as well. Thank you so much, and do stay safe. And I hope that whoever is watching this will also be able to learn something or even be inspired to want to become a banking and finance lawyer.
All right, thanks so much, Ms. Au. And
Okay.
we conclude our COVID segment on banking and finance.